Hello again, everyone. This is Noah Rosenblatt. It is Friday, so you're going to get your week 13 coronavirus Manhattan market report. We are about 17 days away. The countdown has begun. 17 days away from the potential reopening of the Manhattan real estate market on June 22nd. We are praying that that happens. In the meantime, let's show you where the Manhattan markets are. You will see I have a smile on my face. I will show you why in just a moment. Let's get right to it. Supply came in at 5250. We are down 31% year over year. This has been a story of inventory decline and pending sales decline, both of them. But this whole thing started with inventory falling right off a cliff. We started this whole thing at around 6650. And now we're at 5250. This got as low as 5,040 in week 9. You're looking at a chart right now. You saw about 9 weeks of declines, and then we have been turning around for about 5 weeks now, and we are starting an upward trend. I think this is the beginning of the recovery when it comes to inventory. So expect this number to go higher from this day out. Pending sales came in at 1913. You're looking at a chart right now. When I first started doing this, we were at 2650. Unfortunately, I hate to say that the low is right now 1913. That is our low. We have had a steady decline since this coronavirus. That is because deals were just not happening. The front end of the pipe that usually powers pending sales in the active season is not seeing the deal volume come in. We reached a low of deal volume in the 30s a few weeks ago. We're going to go check that out momentarily. But this pending sales number is going to continue to fall even after you see deal volume increase. Okay, so we still have negative pressure in the pipeline for pending sales. What you want to look for is weekly performance increases in both activity, new listings, and contract signed. Let's go right to it. I'm going to my dashboard. I'm going to go to my 1 week filter. I'm going to leave it on active and see where we came in. 1 week filter, 245. That is a good number. We are ticking up. Remember what I told you ever since the beginning. There's going to be 3 phases of this. Phase 1, destruction. Phase 2, normalization. Phase 3, recovery. And the narrative to your clients is I'm going to be the broker that's going to show you all of these 3 phases. And you're going to define the 3 phases by looking at weekly production of new inventory coming to market, new deals being signed, and listings going off the market. And you want to see new listings coming to market go up. You want to see sellers willing to sell in this market. You want to see deal volume going up, and that's the key one. So you're looking at a chart right now. We came in at 245. When we first started doing this, we're at 138. We reached a low of only 70 listings coming to market in week 5. We have seen an increase since then, gradual tick up. This should be in the 4,500 level right now. So we got a ways to go. So this is something you definitely want to explain to your buyers, that inventory is starting to come back on the market. That is a good sign. Clearly, sellers are thinking the market's going to reopen in a few weeks. Let's switch this up to contract signed. Where did we come in? That is the number I'm looking for. Now, all in all, that's not a good number. Okay, but relative to the last few weeks, we've been in the 30s and 40s. That's a good number. You're looking at a chart right now. When I first started doing this, we had 136 weekly deal volume. We got down as low as 36 in week 9. We ticked up to 48 in week 10. We hung around in week 11 at 46, and then we ticked right down to week 12, the low of 31. And week 12 was our last week, and that was our low. And that was a very depressing number. I was hoping that we'd come through today. So we are coming through. This is a tick up. Remember what I told you. This should be in the 200s to 250s. All right. So 61 in and of itself is not a good number, but it's all relative. And if you're going to keep your client ahead of the curve, especially those buyer clients, and let them know when the activity starts to come back, I'm going to be the one that show you that activity coming back. This is the weekly kind of production figures you're going to look for. You're going to see that go from 60 to 70 to 80 to 90 to 100. I don't know how much we retrace the full capacity. I don't think we're going to go to 100% capacity. It'll be fantastic to see. But if we can get the 50% capacity, that brings us up to in the mid hundreds of weekly deal volume. Show your clients that we're starting to see activity come back. This is a very good sign. Finally, let's go to off market and see what we did off market. Came in at 167. Okay, that's up a lot from last week. That's not really what you want to see, but I don't care, quite frankly, about off market because I'm in la la land with the contract signed bumping up to 61. Okay. Off market. When I first started doing this, you're looking at a chart right now. We're at 424. That is not a good sign. You do not want to see off market rise. You want to see off market fall. You want to see sellers go to contract, not sellers go off market because they're not getting their bid. Okay. We reached a low of 83 in week 12, and now we're bounced right back up to 167. So we got to keep an eye on that and see what's going on. But that's where we're at right now. We see new inventory ticking up. We see new deal activity ticking up 2 weeks prior to the reopen. Off market is ticking up also. So everything is ticking up right now, even though you want to see off market go the other way. This to me is a relatively good report, even though in the whole scheme of things, it is not a good report. This continues to be a dislocated, tricky marketplace, but bouncing from the bottom is what we want to see. This is Noah Rosenblatt. I am from UrbanDigs. This is your week 13 market report. I wish everyone have a great weekend, and I'll catch you next week. Bye-bye.